August 12th. My name is Dave Coker, and this is Talking About Finance. And oh boy, oh boy, oh boy, gather around, my friends, lend me your ear. It's time to engage in a brief conversation, a dialogue about your destiny, about a time in your life that will be painted in wealth, in abundance. The echoes of these messages reaches your ears, but somehow you faintly hear whispers of wealth building in the air. You sense something is changing the more you listen to this. And that's true. And yet, among our joy, sometimes I sense discordance, disquiet, and that's okay. Because when we talk about cash flow, when we talk about money without working, some people doubt if this is possible, and that's okay. I understand why. Doubt would nudge them and would force them to ask questions, and that's okay. When it comes time to money, never believe what anyone, especially me, says. But think about what others say, but think about what I say. I'll unveil the truth. Building wealth is a tale that's woven with details, graphs, tables, formulas, values, positions, trades. Do you need all that detail? No, of course not. Now, all you want to do, guys, is this. The message is very, very simple. You can build wealth. You can achieve financial independence if you only consider, if you only buy, if you only hold assets that pay you. Look at it this way. Everyone wants to get paid. Do you want to get paid? Of course you do. Follow this approach and get paid when you buy something, like a stock or a bond, and not just at purchase, but regularly. Quarterly is fine, and I do have some stocks that pay quarterly, but I prefer monthly for one simple reason. I want to get paid every month. And when considering financial advice, think about this. There's no need for secrecy. There's no need for upselling. There's certainly no need to always tantalize you with more details. If you just pay more. Some people are very skilled at doing this. I don't. I just give it away, as very few others do. Don't believe me? Go to Google News, enter Dave Coker, and you'll see a bunch of articles I've written about money, about making money, about achieving financial independence. And guess what? They're all free. There's no upselling. There's no fees you have to pay me to read these articles. So now that we've talked about getting paid, let's talk about finance. The S&P 500 closed the week down about 31 basis points. 8 sectors outperformed the S&P 500. Energy, healthcare, utilities, real estate, communication services, staples, and financials, although financials did book a loss, much smaller loss than the S&P 500. And 3 sectors underperformed the S&P 500. Consumer discretionary, materials, and information technology. At the beginning of August, I mentioned this is generally a poor month. So it looks like we ain't getting a break this year. And again, I expect volatility is going to continue its comeback over the next few weeks. Build up cash. Get ready. Something's going to happen. The VIX traded down to 14.84. It opened the week at 17.10. The 10-year note closed the week at 4.16%, up 0.1% on the week, and up 0.3% year to date. Oil closed the week at 83.12, up 0.4% on the week, and up about 3.6% year to date. Reading some research this week, I noticed that some people believe or are calling for $100 oil again, $100 a barrel oil again, by Q4 of this year or Q1 of 2024. If that is true, good luck with inflation. And yesterday was Friday, so I bought myself Bitcoin and Ripple. Don't ask me why I do it, I just gotta do it. And don't get me talking about Bitcoin and why you need to own some Bitcoin. We'd be here all night. So just buy some and I'll keep quiet, okay? We got a deal? But now let's find out what me and my buddies, some 50 or so investment bank professionals, from all around the planet. Talked about last week. And once again, where are my manners? Let me introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone. We know people at many, many financial institutions. And sometimes I'm pretty surprised at our reach, but then thinking about it, and we were the other evening, we got about 50 people. Each of us got about 20 years, some of us more years experience in the markets. That's well over 1,000 years experience. And now I feel old. But almost anyone in finance is just a connection away. And this week we're reporting from the city of London. We're on Wall Street, we're in Los Angeles, we're in Sao Paulo, and we're in Beijing. We have people absolutely everywhere, anywhere that matters, and that means global financial centers. So let's go. 7 slides for 7 days, and guess what? I'm having the time of my life, guys. Now, this is a really good one. This is a very, very fascinating slide. Not my presentation, guys. Not quite sure who did it. I found it on FinTwit. But look at this. It's really wild. The stock market doesn't care about your politics. Look at the secular trend of the market, as we call it. Where's it going? Going straight up. It bounces around a little bit from time to time, but overall the trend, even within an administration, is up. And across administrations, it's definitely up. And this is really something to think about. There seems to be an undertone in America. Sure, people differ with politics. The Democrats and Republicans challenge each other's ideas, and like in times now, they despise each other. But overall, the underlying tone is to make money. And this is why. And this variations of this chart have been around for quite a while. I've been using this in one of my classes, actually. If you take a look at $1 invested in an asset class way back in 1801, we're talking about stocks, bonds, bills, gold, or the US dollar. With stocks, your annualized return would be 6.9%. You'd have 2.3 million by now. With bonds, your annualized return would be 3.6. You'd have roughly $2,163. Why so low? Compounding, guys. Stocks compound over that long horizon. Bonds compound at a much, much lower rate. Bills, you'd end up with $245. Gold, you'd be off. You'd actually be well off stocks peaks. You'd have 0.6%. Annualized rate of return for $4.06 after your original dollar investment. And finally, the dollar, if you held on to it, would only be worth about 4 cents right now. So clearly, you don't want to stay in cash ever. And as I've mentioned before, guys, back after the global financial crisis, when I saw bank deposit yields going to zero, I pulled all my money out and invested in property. I didn't want to hold cash any longer. I wrote an article. You can find it. It's on Google News. If you just go in and type my name and look through the articles about Airbnb. And guess what? The insiders were selling. About a month ago, I wrote this article. Insiders were selling almost everything they had. And we know why now, because it looks like the insiders knew about this data. And look at this revenue collapse. Look at how these cities are totally not selling any longer. There's a couple things going on. First of all, Americans were in lockdown and they really didn't want to venture far from home if they did leave. So they certainly didn't go outside the United States. They went to a nearby state or a nearby city within their state, and they rented Airbnbs. Now they're not doing it. Now they're showing up in Europe. They're all over this place. So yeah, it's interesting that that's gone out. And it's also interesting that the insiders, if you check out my article, I documented it, they're dumping absolutely everything, guys. Really, really fascinating. And gosh, what are people doing with their money? Again, I wrote another article and we talked about it last week about the money flow. And retail is definitely putting a lot of money into fixed income, into bonds. And remember, guys, price up, yield down. And 91% of the fixed income market is trading below par. Really fascinating when you see prices drop that much. It's really, really wild, guys, what's going on in that market. And finally, when we talk about personal finance, we know it represents a journey of a lifetime. In other words, you got to do it all your life. So when you acquire these skills in personal finance, please make sure you exercise them and apply them regularly, constantly. It's extremely important. Oh, and this is a good one, Gollum. Yeah, even the man in the cave knows you got to accumulate some Bitcoin. You really, really be needing Bitcoin. It's absolutely amazing what's going on, that you need Bitcoin in a major way. And finally, this is really fascinating. Now, we know MicroStrategy, 3 years ago, roughly, said it was going to use corporate funds to acquire Bitcoin. That was very controversial at the time. And yet, look what's happened to MicroStrategy's share price over the horizon. Some 206% increase. Look at Bitcoin, 145% increase. S&P, NASDAQ, positive, but certainly not that much over the 3-year horizon. What about gold, bonds, silver, all booking losses? Yeah, please guys, get yourself some Bitcoin. You don't need to buy one Bitcoin. Remember, a Bitcoin's divisible into 100 million Satoshis. Let's buy a few sats. Stack those sats. Repeat at regular intervals. I like weekly. You can do it monthly. You can do it quarterly. Whatever works for you. Just buy and never sell Bitcoin. Take care, guys.